a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about cloud computing ETFs. And we know that artificial intelligence related stocks and ETFs, they were very popular. They are very popular this year. But cloud computing is also integral to artificial intelligence because sophisticated AI models require enormous computational power, particularly since they work with massive data sets and complex algorithms. So, cloud computing is foundational to AI, and in fact, most generative AI models are trained and they also run in the cloud. So, cloud computing could get a major boost from computing demands of a generative AI boom. And at the same time, by leveraging AI technologies, cloud computing platforms can enhance their capabilities as well, and they could provide more intelligent services, improve their efficiency, etc. Now, enterprise spending on cloud grew over the past few years, particularly after the pandemic, the digitization that was driven by the pandemic, because many companies prefer to rely on cloud-based services for their highly specialized computing services so that they can focus on their core businesses. And cloud computing is also more secure and cheaper than traditional systems, and it also provides firms a lot of flexibility and scalability in scaling up or down their computing capacity according to their business needs. So after the pandemic-driven surge, these companies, cloud computing businesses saw a slowdown, particularly over the past few quarters. The cloud computing businesses, enterprise spending on cloud computing grew at a slower pace because of the economic slowdown. So companies were under pressure to control costs. But that appears to be bottoming now, and AI could further boost these businesses. So let's take a look at three cloud computing ETFs, which are quite different from one another. So the first one and most popular ETF in the space is by First Trust. The ticker symbol is SKYY. It has close to 3 billion in assets, got a first movers advantage, and it charges 60 basis points. To learn more, let's go to the code page on Zacks.com. You can read our research report articles, and then using the link, you can go to First Trust webpage for the CTF and learn more about the methodology. So it classifies each security into these three business categories and then employs a strength-weighted methodology and also applies some screen for size and liquidity. So after that, you get the holdings. We know that the leaders in this space are not pure play cloud computing companies. Amazon's AWS, Microsoft Azure, and Google Cloud. Those are the three leaders. But there are many other cloud companies which are purer cloud companies. So in the ETF, you will get exposure to these companies like Amazon, Microsoft, Alphabet as well, but many other purer cloud companies. The second one that we are talking about is by Global X. The ticker symbol is CLOU, CLOU. This also holds companies which are positioned to benefit from cloud adoption. This follows a modified market cap weighting methodology, has about 615 million in assets and an expense ratio of 68 basis points. So again, to learn more, you can go to the code page and go to using the link. You can go to Global X webpage. Global X, being a leader in thematic ETFs, has some nice research on cloud computing. If you're interested, you can read their research. And these are the top holdings. So again, you will get exposure to the likes of Microsoft, Google, and Amazon, but many other purer cloud computing companies. The third one is quite different because it follows an equal weighted methodology and also holds emerging public cloud companies. This is also the cheapest in this space and has 734 million in assets. Currently, the ticker symbol is WCLD by Cloud. So let's go to the quote page on Zacks.com and using the link, let's go to WisdomTree webpage for this ETF. So you will not get exposure to the likes of Amazon and Google and Microsoft, but purer, smaller cloud companies, and also because of the equal weighting methodology, more tilted towards smaller and mid-sized companies in this ETF. So when these smaller companies will do better, the ETF will do better. But let's see what the performance was over the past 12 months. Over the past 12 months, Global X product CLOU was the best performing ETF, up about 31%. And the other two delivered a performance which was somewhat similar to the S&P 500 index, around 20 to 22% up over the past 12 months. And in full disclosure, I own CLOU in the ETF investor portfolio that I manage. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to all our videos, our video channel, so that you do not miss anything. And I'll see you next week.